We talked last week about $1 trillion a lot,
right.
But you're talking about it in a much different sense. What do you mean?
Well, certainly it's an impressive accomplishment that Apple now has an equity cap of $1 trillion. But the $1 trillion number that we've been focusing on at Goldman Sachs has been the amount of buyback announcements that are happening. And we know that historically about 85% of those announcements follow through to executions. And so that is a significant bid to the market, if you will. And we also know that August, the month of August, is the single largest month of executions, about 13% of the overall flow for the year. So that's an important bid to the market as far as we're concerned. And if we think about technology, that's an area we've seen a significant number of buyback announcements, but you've had a less significant amount of executions this year. So we look into the back half of the year as a sector that's likely to get more executions there.
If buybacks are so pronounced,
right.
And we know earnings and revenue growth is there,
right.
Why 2850?
So
your year-end target.
The year-end target of 2,850 for the S&P 500 reflects a couple of interactions. So the first issue is we have strong earnings growth this year, but that will decelerate next year. So we're looking at approximately 7% earnings growth in 2019. It's number one. But you also have the risk of potential negative earnings revisions from tariffs. It's sort of a risk out there. And then you have higher interest rates. And the expectation is another series of interest rate hikes for this year, as well as into next year. And as that would lead to a valuation compression. Now, if you think about it for a moment, we've had a 7% stealth multiple correction in the last 6 months.
Right.
That's not always widely appreciated. So you've had a valuation that's come down from around 18 times to say 16 and a half, 17 times in that range. And so that's the combination of medium, modest earnings growth and the potential for some more valuation compression would suggest that the valuation of the market ends at around 2850.
Have you put a number or a percentage on where the market would be if not for these buybacks, or how much higher is the market today because buybacks have been so aggressive by companies? Any idea?
Well, it's difficult to say the counterfactual, what if that didn't happen, but the general accretion for earnings as a result of buybacks averages around 1% to 2%. So if you think about that, sales for 2019 will be increasing by around 5%. Expectation margins will be flat, and so your earnings will grow at 5%, but your earnings per share will grow at 7%. That's the 200 basis points of tailwind from accretion on buybacks.